It seems like we've been talking about it for quite some time. I almost felt like streamers were going to fall from the roof when we finally hit 5,000. It wasn't quite as big a party as that, but still a milestone.
It's time to pop open the champagne. We haven't seen this for years. The last time we saw that 5,000 point level was back in April 2010. So really nice to see our market holding above 5,000 points for the benchmark ASX 200 index. It's been a fantastic session, and that 5,000 point is a key psychological point. But of course today we also saw broken that 4,986 point level quite convincingly, and that's the 50% retracement level. That's the 50% retracement level from the all-time high that we saw for the Australian share market back in November 2007 at 6,851 points to the low in the global financial crisis in March 2009, which was at 3,120 points. So we've seen that break now. I guess if we have a look at that particular level and how difficult it has been for the market, just having a look at a chart of the Australian share market, and this is over the last 5 years. I've just drawn a line at that 50% retracement mark, and you can see that we tested it once in 2011, but then it was back down. We also did the same back in 2010, but it was back down. Hopefully this time it's different and we managed to stay above that 5,000 point level. If we do manage to stay above this level in the coming weeks, that bodes well for the next technical level, and the next Fibonacci level is the 61.8% level, which is called the golden ratio. This is at 5,426 points. There are a few resistance points in between. I guess the key one there is 5,200 points, but 5,426 points is where we're looking for that golden ratio. But really today was an example of a classic bull market in which we saw good news being exaggerated and bad news being overlooked. And a classic example was Stockland today. Stockland came out with its earnings report, a profit downgrade, saying its forecast profit to fall by about 20 to 25%. That was from previous forecasts where it was forecasting a fall of 10 to 15%. Initially the shares were down by 1.4%. By the end of the session, the shares were actually up by 5.2%. So an amazing session and an amazing turnaround for Stockland. But of course, the star performers on the market today were the banks. Commonwealth Bank reaching an all-time record high after its half-year result. And if we have a look at Commonwealth Bank, this is what the shares look like over the past 52 weeks. The shares are up a massive 34%. It's not the type of share price performance you typically expect from the banks, which are usually growing at low single digits. But Westpac also having a good day. They're gaining more than 2%. If we have a look at Westpac, these are the shares over the last 5 years. And I just want to bring up this chart because you can see it's at a very important technical level, and that's the peak that we saw in 2010. So that 28.43 level is important for Westpac, and if we see a break of that in coming weeks, another bullish sign for that banking space. So altogether, a great day for the market. One thing I want to point out was that this was a blue chip rally. If we have a look at the top 20 stocks, there weren't that many that lost ground today. The only ones that lost ground were Woolworths, Wesfarmers, Newcrest Mining, Origin and CSL by the end. But 15 stocks in the blue chip index managed to gain, and the top 20 managed a gain of 1%. That compares to the mid-cap index, which only managed a rise of 0.6%, and the small-cap index, which actually did worse than that, with only a rise of 0.4%. So this was a rally really led by the big end of town, and a fantastic day for the Aussie market. The
other big name stocks today announcing, and usually would steal the limelight, except that, you know, the beer method as CBA took most of the headlines. CSL, yet again, great, very, very good results. I mean, this is a company that continues to deliver, over-deliver. What did you make of the share price reaction?
A very strange share price performance today, because we actually saw CSL shares reaching an all-time record high very early on the back of that very positive earnings report. And the half-year report was a good one. Consensus was at $602 million. It actually came in above that, so it managed to come in at $627 million. So it beat expectations. We saw strong growth in its key products, and part of that was helped along by its competitor Baxter, which had one of its units offline in LA, and that's going to continue to support growth in its key products. Strong growth in Asia as well, which is a huge positive. I think one of the disappointing things to come out of this was that we are going to see CSL raising about $300 million in the second half of the year, and it's disappointing given the number of share buybacks that they've done, that they just haven't withheld some of the money from those share buybacks for that capital instead. But the company has come out to reaffirm its full-year guidance, still expecting to see 20% growth on constant currency terms, so no change to that full-year outlook there. But surprising to see CSL shares actually end in the red today, just slipping into the red by 0.05% on that closing auction for the stock exchange. But a good performance earlier on, but that really fizzled out quite strongly and in the end finishing in the red.